Welcome back to part 2 of my conversation with Jörg Sandrock, CEO of Neon. If you haven't listened to part 1 yet, I recommend starting there as we continue diving into the fascinating journey of building a digital bank in Switzerland. That being said, let's jump straight back into the conversation. Enjoy. I wanted to go back to you as a startup and as a CEO, and I wanted to ask you, how has your role as a CEO changed over the last 6 years? I mean, I guess every year it's a totally different role you'll have to fill. Has it continuously changed every year?
I'm not sure if it's really every year in terms of, well, it's now 1st of January. I'm a new one or a different one. Of course, in the beginning, it was really, we had a very, very small team. We started with 3, then 4, then we had our first CFO, Dorette, and after a while, we become bigger and bigger. And with that company involvement, of course, also roles change a little bit. Also in what I mentioned, I think last funding round was 22. Also here, I have a different time now to focus on different things. I would say in the beginning, of course, it was very hands-on. You have to do everything by your own. Now it's sometimes even important already to connect the different people with each other. I think we have a very open culture and are very transparent. We have a weekly team call where everyone has to dial in and give an update always here through the different teams. But still, sometimes it helps if you connect people again, and that's and also sometimes balance maybe even between the founders and teams. That's, I think, a little bit more my role now.
Has the trajectory and direction of Neon, or where you want to take it today, different from 5 years ago in terms of of course, details would be different, but in terms of the overall direction, is your perception or a direction change?
It depends, of course, as you said. I think the overall direction is pretty stable, maybe even to our surprise. We have the same, more or less, fundamental ideas, being transparent, being fair, whatever fair is. Of course, we had higher, or in the beginning, we thought everything could be done faster in terms of product development. We had more products in mind that we want to release, but after learning a little bit more about those products, we learned it's maybe not the best candidates. So there was, of course, constant changes, but from the direction and our aspiration, I think we are surprisingly stable.
I was surprised to hear that you only have, how many, 58 FTE?
Yes.
Given the size and impact you have. I imagine that the push is just to grow. Is there pressure there to grow as faster?
I mean, in 2023, the fintech industry changed significantly. Funding was less available on a European and international level. Focus was not growing anymore, but rather become profitable. So that's also what we try to achieve. So growth is now more becoming profitable soon. And here, of course, it's also some pressure because you only have your limited funds and you need to manage to not use more. But it's not the pressure of growth anymore. Actually, on the growth side, we are clearly ahead of our plan, at least for 2024.
When you said that funding changed in 2023, what changed specifically?
For us, it was, or the impact was a little bit lower for we did our funding round in 2022, so we didn't plan for 23 one. But when you speak to other founders or just can read it in every, let's say, VC newsletter, funding declined. people were afraid, or the VC industry was not longer really excited about fintechs, but rather investing in AI or other industries. So it was more difficult to get funding, and many startups reacted by downsizing their operations, maybe postponed some new market entries. But for us, the actual impact was rather low, or was not there. But for many other companies, it was.
Speaking of AI, I wanted to ask you, it seems like as a company, you've decided to dive into the AI pond with your AI features. Why did you decide to go in that direction for the company?
In end of 23, there was one guy, our head of data, who was a big fan and an enthusiast about AI. He started to set up a project in the company where he spoke with the different heads of the different teams and analyzed and investigated certain AI ideas, with the result that no one is really, or we were not excited about the ideas. Was a very poor business case behind it, so we left that topic. But in summer, I would say, on one hand, the progress AI does is really amazing right now. It's of course a lot of funding in that industry. It's really technical progress. You can, when you use it, you sometimes you see it after months how Gen AI solutions have improved. So in summer we came back and we were more excited about other ideas, and also due to other capabilities. And we started then to start with 3 or 4 prototypes to get a better understanding of the technology and the impact, and what kind of capabilities are needed, and what is the best tech setup, what needs to be done in-house, what could be sourced. And we're still in this prototype phase. We launched one product, 2 others are to come very soon. The 4th one is maybe Q1 next year. And we still in discussion how we want to, or what the organizational impacts on our tech side and product and data teams are. But yes, it's quite exciting. Sometimes you could get really impressed about the AI capabilities. Sometimes errors are really sometimes maybe fun, but it's a different for the tech team. I think it's a different way how to provide software. It's not deterministic in many cases anymore. So QA has a different function. Yeah, it's so. Yes, but very simple answer. I think it's a good technology for us right now.
Is there any concerns or pushback regarding the sensitivity of the data? Because I imagine
Yes.
that with a lot of people's personal data needs to be consumed for this to be useful.
Yes, actually, we found a setup where we don't share personal data with a third-party AI. We have our own, or the setup is we use one data center, and in that data center also the model runs, and the model does not share any kind of data with any third party. So yes, we share it, but we share it only in the way, or not share is really wrong. We use the data in the same data center and don't share it with any third party. So there is no change to security settings. That was also some dimensions, or that was important milestone for us to find a setup where we don't need to share the data with Google or ChatGPT or someone.
So it is a third-party Gen AI company. You're not developing that
Yes.
in-house. Yeah.
Yes. No, I think for us on a, let's say, strategic level, we should try to avoid to develop too much in-house, because what I said, Microsoft and all the other big tech companies are investing so much right now. You literally can see the progress. So what we use is we apply such a model, run it in our system, and hence we don't share any data with the model provider. Actually, we use different models for different tasks. transparent.
I guess if you developed it in-house, then going away from your core skill set anyway.
Yes.
Yeah.
Yes.
How do you decide then? What's your company's or thinking in terms of how you prioritize new features? So how much of it is going in a direction you think is great for the company versus collecting customer feedback versus listening to investors, listening to the market?
It's honestly, and it's very simple. We have a business case for every initiative, but and the business case is either do we generate more revenues by more activities or whatsoever? Do we reduce the cost because operations is now simplified? Do we attract more clients? And this is then balancing off with the marketing budget. The AI piece was a piece actually where there was no business case behind it. It was more our judgment in terms of, hey, yeah, let's do it and find it out. So of course there could be decisions, let's say outside the business case logic, but from the product team, we typically request a business case for every initiative. Of course, not if you do an upgrade on I don't know, something. You need a new logo in the Apple Pay flow, then there's no business case behind it. You just have to do it, or smaller initiatives. But for the larger topics, we do a calculation, and based on that, we do prioritization.
How far does user feedback go? I think one of the cool things Neon has done ever since I've used them is the relationship with you and the customers, and it feels quite intimate. How does someone giving feedback via the app or email pass through to product board?
Yes, that's it is clearly reflected, but also in the business case, if we would make it maybe a little bit abstract, or as an example, an abstract, more abstract example, if there is one product and people really start to ask for that product, we take a look at it. And if you have maybe 100 clients who want that product, we would believe maybe the conversion in terms of how many of our clients will actually use that product or buy that product is maybe higher if there were the opposite in terms of nobody never asked for that product, then our assumption would be lower, and hence this is reflected in the business case. What we do is we track every client feedback. Whenever you write an email or make a call or whatsoever, and there is an idea, we track it. So we have one board, and of course we look at that, but we try to, what I said in the beginning, quantify based on these assumptions. And sometimes we even manage that people, when you request a certain piece, we give feedback. Hey, thank you. It took us maybe a little bit longer than expected, but now this feature is live, and thank you for your feedback. You were one of those who really wanted it. That's something we do.
That's
also
nice.
on client communication side, we try to do it less, let's say, banky in terms of we don't want to use the bank wording because sometimes it's really hard to understand and people get maybe even scared by reading some information from the bank because they just don't know what they have to do. And we always try to explain it in a level or in a language and on a level that people hopefully understand it.
Is there demand for any products which you simply won't build because it is going against the direction of Neon?
We had a longer discussion about crypto trading.
I was
that
going
was something
to check there.
That was in 2021. There was this crypto hype, and we decided more or less not to do it for certain reasons. Now we implicitly offer it, so there you can see sometimes it's some changes. We did a crowdfunding in 2021, and we had a lot of startups asking us, hey, could you share a little bit knowledge, experience, and what we typically did, but could you also offer our our crowdfunding offering to your base, and that is something we said, well, we don't want to do it because, of course, we have crowd investors, so we did it, but we believe that a large proportion of our client base have, on one hand, a pretty high trust in Neon, but on the other, would not understand that when you invest in a startup, actually, there's also the risk that this investment might be not successful. So that was one product that we clearly said, well, that's nothing for us. There are other products that we would like to offer. Twint would be one where we need to offer a workaround. We don't have our own Twint, but that's economically not feasible for us.
I guess it becomes more and more difficult to maintain the simplicity of Neon whilst adding more and more features. I think one of the things I certainly notice when I use Revolut when I travel is it is such a busy app now because of all the things they offer. How do you, I guess, is that also a consideration? How do you balance new features or new offerings versus simplicity?
Yes, that's a very tough one for us. It's as you said, it's our 6th or 7th year. Of course, people on product and tech side tend to develop more and more and more. And on the other hand, people go or other way around. People also appreciate the simplicity, and sometimes simplicity means also a small number of features. I immediately understand everything that is on the screen, and that is a difficult trade-off. Revolut does it, I think, completely differently to us. They just have the capacity to test it. They launch something, and sometimes I also use Revolut for market insights. They do something, and I think I'm at least a little bit a trained user. I don't find topics what I want to do, and even just to top up the account, I couldn't do it on Revolut because it was hidden. And 3 months later, they fix it. Then they have the next launch of wave of features. Front end is too complex, and then they fix it, but they just have the resources to do that. We hadn't. So we have Zoe, our UX champion designer. She does some user research, and we are the users of Neon. So if something is really complex, we start to complain as the team, and then we need to fix it. But it's a difficult one in the next years. On one hand, to keep it very simple, and maybe to even simplify some stuff while adding more products or adding more functionality to it.
I was speaking to Baptiste Vicht a few weeks ago on the podcast from the Poor Swiss, who does all the comparisons of all the different, and he said that over the last couple of years, I mean, Revolut, I mean, I'm sure you would know this, and also Wise, now that they have their own exchange rates, all of a sudden your Neon rates still are now more competitive than these companies, which is pretty amazing.
Yes, it's not about Revolut, this podcast, but they have a pretty complex scheme. I don't know if many people know what I understood, and it's complex. I think it's three different sheets. You have a very good rate when you do your transfers on a weekday below 200 Swiss francs or whatever the currency is. But you pay up to 2% for exchange rates when it's on a weekend and above 2%. So when let's say the journalists or those people who really do the comparisons, they typically work on not on the weekend, and they don't do more than 200 Swiss francs as a test typically, and they say, hey, Revolut is great, it's a nice exchange rate, blah blah blah. But as a customer, typically you don't look, hey, I don't want to spend this on a weekend. I want to spend it on I avoid this payment and will do it on a daytime during the week, and hopefully below 200 Swiss francs. So they managed with this, on one hand, they are positioned as being very aggressive on the pricing, but in recent years they have clearly changed this proposition, but still managing this kind of market perception, and it's not correct anymore. Also, when you look at other companies like N26 did some crypto trading, it was massively expensive. I think you had to pay 2% or something for crypto trading, which was not market standard at that time. And yeah, it's what banks do or Revoluts. And I cannot say that we never will change anything on the pricing, because with this decrease of interest, there might be, it is a challenge for us, but we will be at least transparent.
I think that's...
And Revolut is not transparent anymore.
Interesting. Yeah, I also wanted to ask you about your decision to go crowdfunding. I mean, is that a common thing to do when it comes to raising capital?
For many competitors, it was. Monzo is a very prominent example. Monzo is a UK, I think the leading UK-based bank focusing on UK only, and they, with every funding round, they did crowdfunding in parallel, and it was well perceived because when you are a client and an investor, typically your engagement is higher, and so we saw some very positive feedback around it. And in 2021, there was a change in Swiss regulation, and we thought, hey, maybe it's nice to offer that to our client base. We expected something like 1.5 million. And really, it was 9 months planning, a lot of legal work, and then after and of course discussion with the investors, because they were afraid of a cap table with 100 or 200 or something additional investors. So we did a lot of research, and I think we found a good solution for every party. And then we started in 2021, and we're really excited because we were sold out after a very short time, less than an hour. We sold shares with a value of 5 million. And a year later, we had our second and last crowdfunding round. We at least managed to get 8.5 million or something. And those who invest in the company are more active, have a better, from our perspective, better usage, higher level of activity. They do more referrals. So it's quite common in that industry, yes.
Is the main reason for it because you need more money, or is it really to connect with your user base?
It's maybe both, but even more. So one topic was, of course, at least for the second round, it is a significant amount of additional funding. In the first round, when we really expected 1 million, so that was not really planned that we have a little bit more funds. It's the connection. We have not really pushed too much effort to manage this crowd community and providing own website or do a lot of every month in another meetup. It's more, we have, I think, every 6 months communication. It's maybe a Zoom call. It's maybe an email only. They need their text statements. So we have from time to time some communication, but it's not really pushed in, hey, now you're an investor. So that's something we discussed. There are a lot of advantages by doing that, but also it needs a lot of resources. And honestly, we decided based on the trade-off between resources and advantages, also in interest of the investors, not to really manage or start to manage our own crowd community. I think Bonzo does it more strategically or more structurally. They do a lot of events, a lot of communications, but to be honest, we don't have the funds for that.
Al, I wanted to ask you one more question, and which is the future of Neon, with the exception of AI, which we've already talked about. In 5 years or so, where do you hope Neon is compared to where it is today?
I think we are at a level where we have a almost complete product for everyday banking usage. What is missing are maybe the next levels of banking product in terms of lending products or other investment products, accumulating your wealth, managing your finances. And in 2 years, I think, in 5 years, sorry, I think we should be able to offer also both types of products. There are some challenges around it. For instance, when you think about mortgages, no company so far has been successful in the Swiss market for mortgages with a digital-only offering. So that will be a big challenge for us. You said we spoke a little bit about AI, but I think will or could help us also by offering a better solution in the wealth area. So I think we will go in both directions. And in 5 years' time, hopefully it's a nicer product. On the regulatory setup, we have hopefully in 5 years, I don't have the figures in front of me, but we should be at least about 400,000 clients. Maybe at that point of time, it would be also good to have our own banking license.
And become an actual bank.
Yes.
Well, Jörg, I really appreciate you coming on the show, and I've really enjoyed this conversation. Thank you.
Mike, thank you very much.
All right. Have a good one. Bye-bye.
You too. Bye.
Thanks for tuning in once again. If you enjoyed the episode, please take a moment to like, subscribe, share, follow, whatever it is on your preferred player. Share it with a friend, share it with family. It really helps to get the word out, which does really help grow the show. And don't forget, you can visit howitticks.ch for more details about the show, transcript, and links to topics we have discussed during the episodes. You can also use the site to share your feedback. I do love to hear from people, hear your thoughts, hear your preferences, hear any guests who you think might be interesting. Thanks again for listening. I'll see you next time.